Hello and welcome to gotstockz. Today is June 15th, Saturday, 2024. We're going to take a look at Broadcom. They've announced a 10-for-1 split. So we're going to look at some of the fundamentals of the company. We're going to take a look at some of the charts. We're going to look at some technical analysis. So the current market cap for Broadcom, ticker symbol AVGO. Market cap is $807 billion. It's a pretty big company. The market cap is pretty big. They're heading towards $1 trillion. The PE ratio is 74. Does pay a dividend. Now, the average volume is 2.7 million shares traded per day. Today's volume, 6.8. So that's pretty substantial compared to the average volume. That's institutions coming in with some big money that are believing in what's going on inside this stock. So the year-to-date return is 56% compared to the S&P of 13.87. A one-year return of 107% versus the S&P's 24.32%. Three-year return of 299% versus the S&P of 27.88%. And a five-year return on Broadcom of 623% versus the S&P's 87.84%. So the moral to that story is invest for the long haul and always invest in good quality companies. If you've held this company for 5 years and traded a low, this is the COVID crash right in here. Traded a low of $155.67 compared to the high recently achieved $1,747.24. I'm going to zoom in on this chart for a 1 year time frame. Each candle in this chart represents 1 day. This is a 1 year, 1 day chart. What we want to look at are moving averages, and we want to look at how the stock respects its moving averages. All stocks have certain specific characteristics, and you want to study that a little bit before you just jump into it. Look at the charts, see how it trades, see how the flow is. And this is actually a good looking chart, and I like the way this thing trades. Moving averages, the white line represents the 10-day exponential moving average. The purple line represents the 21-day moving average. The green line represents the 50-day moving average. And the red line represents the 200-day exponential moving average. So last quarter on 3/7/2024, the earnings estimate was $8.94. The actual was $10.99. So they beat the street. But if you look at what happened when they beat the street, what happened, the stock sells off down to its 50-day moving average. It recovers, it consolidates for a month, and then it retraces again. It breaks the 50-day moving average. But we're just basically in a consolidation period. If you look at this whole area all through here, it's just trading inside of this box. 6/12/2024, the estimate was $8.15. The actual was $10.96. They beat the street, and the company gaps up. This is a tremendous gap up. Typically, when the gaps are this substantial, it tends to be a gap and go. I like gap fill reversals. I like when there's gaps and then the stock trades on a lighter volume and fills the gap. But when they gap up this substantial percentage ratio, a lot of times these are gap and goes. And if you wanted to trade the gap and go, you're going to place your stop here at 1652.52 or just a little bit below it. Because if this starts trading into this gap, what can potentially happen is it can trade all the way down to here in the 1448 range, which that would be the 21-day moving average. So the 10-day moving average is the white line, the 21-day moving average is the purple line, the 50-day moving average is the green line, and the 200-day moving average is the red line. The stock was respecting its 10-day moving average. It retraces, it respects the 21-day moving average, and when it breaks it, it comes down to the 50-day moving average, and then it trades at the 10 and the 21-day through this whole area here, breaks the 50-day moving average, but it comes down to a level of support. It kind of hangs out at its moving averages. It's extended from its moving average currently. So you can either wait until the moving averages come back up to the stock, or the stock retraces back down into the moving averages. That's a potential outcome. We're just looking for how this stock trades for the past 2 years. It's holding the white line, it breaks it, it goes down to the 50-day moving average. It's holding the 10-day and the 21-day and the 50-day all through this area. I love the way this stock trades. It pulls back, it takes off, it pulls back, it takes off. These are just nice setups. I'm going to definitely be looking at this one and keep my eye on it. That, and then this here is going to give us an area of support. So as you can see, on March 4th, 2024, the high was 1438.17. Going forward a couple of months, this acts as resistance. The stock pulls back to its 50-day moving average, takes off, now it gaps up. I'd like to see the stock pull back on lighter volume and touch these areas. If this starts trading into the gap, then you have to be careful because it can easily fill this gap up, and then we have to reevaluate. If it starts trading into this gap, then just put it on hold. If you want to trade this now, you can potentially get in at 1652.52 range. We can look at the bottom of this candle, 1682.10. It's currently trading at 1735.04. Entry points are going to be 1652.52, 1682.10. We need to give this a little more time. Let it establish if this is going to be a gap and go or if this is going to start retracing. And then we can make a decision at that point. I hope this information was helpful. Appreciate the support. So please like, subscribe, hit the bell. And that will complete our analysis of Broadcom. And always remember to do your due diligence, dot your I's, cross your T's, and don't forget the Z.
Gotstockz.
God bless and happy investing.